Good morning. Welcome to the weekly market analysis by sectors for the week ending 10th August 2012 by howtotradesafely.com. Please note that this analysis is done for informational purposes only. Please pause and read the legal disclaimer below. This week, we had news coming out from the US and from China. The most important news coming out from the US was that the trade deficit in the US narrowed more than was forecast. This was due to the big drop in crude oil prices in more than 3 years. So this helped to cut the nation's import bill. In addition to the better trade deficit, there was better initial job claims. And with this, the market went up. This is a better economic performance by the US this week. China did not do as well. The China's consumer price index was likely to drop below 2%, and therefore more economic spurs are expected. China, which is also an export-oriented economy, the July exports only rose 1% versus the economist's estimate for 8%. Due to this, markets dropped, but they went up because of the US better than expected economic performance. I saw this and I just put this up for something to read. Let us take a look at the broader market. All four components of the broader market went up. The Nasdaq went up the most, followed by the Russell 2000, and then the S&P, and then the Dow Jones. The Nasdaq looks the most bullish of the lot. The Russell 2000 is in a consolidation pattern for the last 6 weeks. The Dow Jones and the S&P are in a 5-week uptrend, but this week they are showing much lower volumes. This is a matter of concern. The VIX has dropped from 15.6 to 14.7, a drop of 0.9 or about almost 6%. A drop below 15 is considered complacency. This means people are not expecting anything. Crude oil went up by more than 2%, but on lower volumes. These are the individual charts. Dow Jones is up, but on lower volumes. S&P also up, but on lower volumes. Nasdaq solidly up. Volumes are about average. Russell seems to be in a consolidation pattern. The VIX has been in a long-term downtrend since the beginning of June. It's now gone below the complacency level, and it looks to be at its low point. This is already at a support level. Light crude oil went up. It's still carrying on up, but on lower volumes. This is the sector summary. We can see that the three worst performing sectors were the defensive sectors, of which is utilities, followed by healthcare, followed by consumer staples. This is a good sign. This is normally a bullish sign, if not for the fact that all the sectors are showing low volume, indicating that people are staying on the sidelines. The best performing sector was the technology sector, was the energy sector, followed by materials, followed by technology. The financial sector is it has a potential end to the uptrend due to low volume. The energy sector is on an uptrend but also has low volume.